and John Najarian, co-founder of Market Rebellion. It's a very strange week in stocks. I mean, you have the Fed. All right, the Fed did what everybody thought it would do. It cut its target rate by 1/4 point. That did spark some pretty big rallies, but the rallies didn't seem to stick. Let's start off with Nancy Tengler, and then we're going to bring in John, and then Steve Forbes is going to weigh in. So this is going to be the most fun we've ever had, Nancy.
I feel like I'm 30 years old again.
I know, it's
so good to be on with all of you.
I know, it's great. It's a golden oldie, like, hey, I don't know. Go ahead. Anyway, do we buy the market, own the market? Is the market full of liquidity? What's the market going to do?
Yeah, so I guess a couple things. I mean, if you think about rate cuts, what's good for risk assets is bad for savers. So as the Fed cuts rates, savers make less money on money market accounts. And I think the sort of magic number is 3% when they start shifting out of money markets into risk assets and other investments. But the point is that we have $7 trillion on the sideline. So there is liquidity. The bond market's kind of a mess, and I'd love to hear what John and Steve think about it. The yield curve is wonky. I think part of that is because we're seeing a lot of corporate issuance, and that's driving rates to some point, on the curve. But in general, I still am very bullish. The CEO, the Business Roundtable CEO confidence came out. And they are pretty optimistic, driven by the One Big Beautiful Bill Act. So think, immediate expensing, the tailwind to consumers as well, but also the opportunities that they're seeing in regulatory reform. And so we've talked about that a lot, but when you hear the CEO start to say it, earnings were amazing, guidance was excellent. So even though we're getting a lot of volatility right now, here's my theory on that. Hedge funds are driving the volatility. By the way, 67% of hedge fund managers are Democrats. Not my number. So, a lot of trying to play catch up. They've been short this market, and now they're trying to catch up. And they're driving a lot of volatility. John's probably much smarter on that than me. But I think you want to use this volatility as your friend if you're a long-term investor, 2 to 3 to 5 years, and buy the great names that are getting pummeled despite excellent earnings, Broadcom, Oracle,
how about if you're
many others.
How about if you're a 40-year investor, 50-year investor?
Then you just sit there and reap the benefits.
Just sit there and enjoy, have a good time. Go out there. It's fabulous. John Najarian, the VIX is 16. Isn't that low? On the low side? Quite low?
It is, Larry. 16 is pretty much median. It's normal.
Median. Oh.
In other words, we expect that the markets would move up or down by about 1% a day. That seems to be what they're doing. It seems that, just as you said, we'll get a pop on the interest rate cut by the Fed, and then we'll give it back. But, it'll be 0.5% to 0.75% up and 0.5% down. I mean, so the VIX is where it should be. By the way, though, I have to say, Nancy, nobody's going to think I'm smarter than you or Steve Forbes. Even though I do trade a lot of volatility, it's very flattering even for you to say that, but thank you. I think that she's exactly right about earnings, Larry. They're strong. They're very, very good. I think looking forward, whichever Kevin it is, and with all respect to Mr. Forbes, and I would love to see Secretary Bessent be the Fed chair. I don't think that is in the cards. I think it's going to be Hassett. And I think that we're going to have both the president that wants the stock market higher, the Fed chair that wants the stock market higher, and he is going to be pushing rates down, but he's not going to be there till May. So I think it's kind of a little bit of turbulence, a little bit of winter time, not harsh, but a little bit of turbulence between basically January and April when all of a sudden, finally, mercifully, we get rid of Jay Powell and we get a new Fed chair. And given all that and the chase for performance, I think the end of the year here could look pretty good. A little bit of turbulence in the first quarter of next year. But then, because we've got midterms, and I think both the Fed chair and president are going to do everything in their power to lift the markets. I was just on stage with Tom Lee here in Miami, and he thinks we're going to see, there's a Miami sound for you, little Lamborghini going by. But I think we're going to see almost a super cycle as we move into the second half of 2026. In other words, a rally of fairly big significance.
A melt-up.
Yes, sir. Yes, sir. That's what I'm looking for.
A melt-up based on easy money and good profits. Is that fair? Is that what you're thinking?
Yes, sir.
Yeah.
That's exactly it.
No, that's what I'm thinking. Now, Steve Forbes, you might not be so melt-up happy. I don't know. What do you think?
Well, I take first your philosophy, Larry, and that is in terms of investing for myself. You have a cash reserve. I always like gold, just as an insurance policy, not as an investment. And then just let things ride. And for those who can know how to do the ins and outs of the market like John, God bless him, I would be caught flat-footed all the time. But in terms of the market itself, one of the things we have to anticipate is what happens if and when, as I think it will happen, the Supreme Court rules against the tariffs that were enacted by presidential executive order, not the ones like Section 232, which went through an already legalized process, but those that came from executive order, which is over half of the tariffs. And I think the Supreme Court will be smart enough when they rule against them to say they don't have to refund what they've already collected, since it was done in good faith. So that'll avoid a lot of lawsuits and turmoil. But also will set the stage. The president may try to enact some of these tariffs by through legislation, but also I think sets the stage for a new reconciliation bill where we can get some of these big tax rate cuts that'll have an even bigger impact than what we got in July 4th with the BBB, Big Beautiful Bill, which will be very beneficial for the economy. And that plus the announcement of a stable dollar and continued deregulation. As you know, deregulation is a boring subject, but by golly, the prospect of the now looks like we may someday soon get washing machines that can do a load under an hour and with less water. You know, old American ingenuity at work again instead of being stifled by regulation. That's good stuff coming not only in the midterms, but for 2028.
The Biden years, we had waterless washing machines. We had waterless showers. And we had
heaters that didn't heat and air conditioners that didn't cool.
And we had lightless...
And toasters that didn't toast.
We had lightless bulbs that didn't, you couldn't read by. I mean, we almost went back to Freddie Flintstone there for a while.
And there was no comic either.
Maybe
no
cartoon. No, and it's true. And there's deregulation for banks. In fact, Scott Besson is talking about deregulation for the whole federal supervision apparatus.
Getting rid of Basel III. Just throw all that junk out so we are in charge of our bank regulation again instead of these international bureaucrats that helped create the crisis of 2008.
I think that's the direction he's going. I think that's exactly right. And he can do that as the Treasury Secretary. I mean, I think, he stays at Treasury. He'll work well with either of the Kevins. I mean, I don't, Steve, with all respect, at this point, I don't think Scott Besson's going to be Fed chair at this point. Yeah. But I don't know, because Mr. Trump has very significant powers of persuasion. So if he wants to persuade, he may. Maybe this whole thing is kind of a big head fake. I don't. Nancy, you think it's a head fake? It's sort of interesting, actually.
Yeah, I kind of do. I mean, I think the most remarkable thing is that we keep hearing about how Kevin Haas would be too political. I think Jay Powell is the most political Fed chair we've had in my 40 years. Yeah. And so this notion that somehow he's protecting Fed independence, and Kevin Hassett, who is one of the finest people I know, as a human being. I mean, and then he has the qualification, of course. And, there's also an article, he's on the cover of Barron's this weekend, and there's an article from a number of his peers, or there's mentions from a number of his peers, that, he wasn't political, he's never never been political. He wasn't political at the Fed. So I think this notion that somehow because you know Donald Trump or you work for him, as you did, Larry, that you're political and you can't think for yourself. And I just don't believe that. So is it a head fake? I mean, he makes me crazy with the way he goes back and forth. I know it's the art of the deal, which I'm not an art of the deal kind of person. And so I get, it's just like, yeah, it probably is. But I do think Kevin Hassett would make a fantastic Fed chairman. Well,
I do too, and I think Kevin Warsh would also. But I want to say, we have to take a quick break here, but I want to repeat something. A fairly objective observer, all right, Mohammed El-Arian, who has repeatedly in the past 6 months argued that Jay Powell has done more to damage Fed independence than any Fed chairman in recent time.
100%.
That's right. I mean, and Mohammed has no particular political axe to grind as far as I know, but he's just looking at it and he has a whole laundry list of reasons why, which you all have basically talked about. So this quasi-attack on Kevin Hassett is completely, utterly unfair. Anyway, let us take a break. We're here with Nancy Tengler of Laffer Tengler Investments, the great Steve Forbes needs no introduction, and John Najarian, who's got a VIX index down. What is it? What did I say? 16. That's a medium VIX. Everyone here is optimistic. I'm Kudlow. We'll be right back.
The Larry Kudlow Show on the Red Apple Podcast Network. The Larry Kudlow Show on the Red Apple Podcast Network.
So we just have enough time for one quick go-around, bull or bear. Nancy Tengler, CEO and CIO Laffer Tengler. The great Steve Forbes, Chairman, Editor-Chief of Forbes Media. And John Najarian, co-founder of Market Rebellion. Lightning round. John Najarian, you start.
All right. When you look at Oracle up 44% before the earnings were announced, even though it was significantly off the high that it put in after that great earnings and their guidance back in August, I wasn't really shocked, Larry, to see Oracle and or Broadcom. Broadcom was up 75% before its earnings. Those are phenomenal returns. Anybody that loves investing in stocks and options knows that you don't get those every day or every year, 44% or 75%. So seeing a little, whether it's a 10% pullback or whatever, I don't think it scared me or anybody who's serious about what Oracle and Broadcom do. They're both deeply involved in, of course, what goes on in data centers. And I think that's going to be, something we'll be talking about for years, Larry.
All right.
So overall, just as Nancy said, earnings are great, and I think they continue to come in strong.
Nancy?
Okay, our 5 for 25 is up 28% through November. We have a 6 for 26. Walmart, AMD, Tesla, CrowdStrike, Quanta Services, and our flyer is D.R. Horton because we think housing is going to recover.
Ooh.
Amen to what John said about Oracle and Broadcom. I think you want to own those still for the next 3 to 5 years.
I like the housing's going to recover.
Yeah,
interest rates going down are going to be. Yeah, it's going to be great for housing. I agree with Nancy.
Steve Forbes, lightning round. Pick.
It's going to be a cautious time, and even if we get the inevitable correction, hate that word corrections if the market going down is correct. But I've been old enough to where I just ride these things through. I think what AI is going to be doing, that's why you want robotics. Company like Honeywell is going to split up. They've got a great new company coming along that's involved in robotics, has great potential, especially in healthcare, for people with disabilities, for elderly people. These robots that are coming along are going to be able to do wondrous things to make life better for all of us. So the bumps that come along, I just know America is going to get over them. So if you take a hit, ride it out, we always come back.
Love that. Kudlow strategy. Completely. Love that. 40-year buy and hold. 40-year buy and hold. Gotta have it. One quick go around. No, we're out. We're out. That's Louis Armstrong. He's saying that's it. Steve Forbes, thank you. You're wonderful. We appreciate it. Nancy Tengler, as always. John Najarian, terrific stuff.